Good morning. Today is Wednesday, June the 14th. The time right now in Singapore is 8:29 in the morning. And today we're going to talk a little bit about what happened overnight. We have the release of the U.S. Consumer Price Index, or the CPI. It came in very much within expectation. On a month-on-month basis, it only rose 0.4%. On a year-on-year basis, it is rose only 4%. So basically, this has shown that the inflation numbers has been steadily climbing down, and this is just 24 hours ahead of the FOMC meeting, in which the Federal Reserve will have to decide on what they want to do with their interest rates, and that will be happening tonight at 2 a.m. Singapore time. Technically, it's already Thursday Singapore time, and so do watch out for this major announcement for the week itself. In fact, the whole week has been waiting for this FOMC meeting, in which the Fed will have to decide. The market is already expecting that the Fed is likely to pause, and last night's CPI number release probably gave the Fed a cover to actually pause, because there was no acceleration in the inflation front. So maybe this is where the Fed will be pausing after 10 consecutive rate hikes since March of 2022. So this is what the market is expecting. And as a result, we can see the equity market has actually rose on the idea that if the Fed pause interest rate, it is actually good for equity markets. Now, I tend to defer, because the Fed has actually telepathed to the markets that a pause is not necessarily going to be conducive, in their opinion, for a asset bubble to develop in the equity markets space. So this is where we are right now. Market do have the expectation that a pause is great for equity markets, but we are not talking about a pivot here, which means a cut in interest rates. There's no language that the Fed has been using that indicates there's going to be a cut in interest rate, and that can only happen if the U.S. economy seriously go into a recession, of which we are not currently seeing signs that it is in an imminent recession just yet, although the signs are not good going forward. So in the Dow Jones Industrial Average, in which you are seeing the chart in front of you, last night we have a high of 34,310.3, which is almost comparable to the year high. The year high is at this level at 34,342.3. So we are very, very close to flirting with the year high. Will the market actually go beyond that level? It's everybody's guess, but my inclination suggests that we probably will see a pullback. Is what we call a buy the rumor, sell the fact. Possibly, this is what the market may play out. If we do get a pullback, I suspect the market may actually go down all the way to 33,000. That, or maybe I have to adjust this level a little bit. Okay, maybe the market will probably be looking at somewhere in 33,400 levels, and before it decides if you want to continue to charge higher. So in the meantime, the key level for me, as far as I'm concerned, the key level is not the year's high at 34,342.3 over here. I think the key level here is this level at 34,712.3. So if this level is breached, of course, my outlook for the market will have changed dramatically. So do watch out for this level. In the meantime, stay awake for the 2 a.m. Announcement by the Federal Reserve as to what they want to do with the interest rates. In the meantime, you take care, and I'll come back to you tomorrow with another update. Bye-bye.